Nasdaq ending the week at 13,241 points, made for an upturn of 204% for Nasdaq last week. And Dow Jones did almost as good, up 202% for Dow Jones. We are heading into week 23. You are listening to the Stockinvest.us podcast Trading Tips with Jim. And in this week's podcast, which will be a bridge between the old podcast series and the new podcast series that will be coming, I will for the very first time reveal more information and a few peeks into the trading booth which I'm currently building. Anyway, we have to look a little bit about last week, a little bit of what we think will happen this week before going to the trading booth itself. It was particularly the end of last week that made for the greens in the market. And again, it was reaching the signing of debt ceiling, and all these things pushed markets up. A few other numbers came in. It was job numbers came in a little bit stronger than expected, and the sentiment were very good. But as I told you, in a current situation like we are, Nasdaq may move all the way up to 14,000. It's just how it is. But if we look at the buy and sell signals, we can clearly see that Nasdaq, for instance, moved from 24% buy signals last week up to 39% and is now in a very overbought territory. Here usually two things happen. First off, you will have increased volatility, meaning even bigger swings per day or intraday, and it will either just skyrocket upwards or it will go for a brutal fall. There is nothing in these numbers showing that there will be a quiet, just steady week in either direction. It should be volatile, and it can very easily go both ways. And as I told you personally, when markets are like this, I do my trading a little bit different. I stay a little restrictive, a little passive, not going too high exposure, even though last week we added yet another stock to the trading portfolio. The reason back then was that it was a fair chance that the market could go up, and Foot Locker, which was the ticker that was added, was one of these which I thought could do very well. I got Foot Locker last Monday, but during the week it didn't move much, but now it really shows all the signs to move. Start moving. We will see how Foot Locker will do, and we will get back to that in the end of the podcast when we check the trading tips. Anyway, the new week is here. I already said that Nasdaq shows all the signs of being overbought. Well, what are the things that can drive market in all sort of direction? Now the debt ceiling is over, it's finalized, it's signed, and there is no more incentives coming from that part, either good or bad. We know the deal, we know the content of the debt ceiling, and when that is done, other things has to drive the market. But I will I want you to pay attention to one thing. So the debt ceiling, yes, it's a good thing indeed for the economy, because it means that money can just be pushed into the market at the same pace like it was before. Very expensive budgets in US, throwing tons of money into different things. New Green Deal is one of these things. And now they can continue because there is no debt ceiling. So money will continue to pour into different sectors, which Biden and his administration is focusing on. But this debt ceiling is not like it will come for free, because US will have to push up bonds. So this is the next thing that will come. US will offer tons of bonds in the market, with some having very, very good yield. And what will happen is that money will flow up from the stock market into the secure bonds. And I think this can hit the market very hard, maybe starting already this week. We will see. But money was already on the way out of the stock market. We had a fabulous upturn since January. I think the market says, I believe the Nasdaq is up some almost 27% since New Year. And Dow Jones done quite well as okay. But during all this time, money has steadily been going out of the market and not into the market. The reason the prices are going up, stock prices are going up, is because people are reluctant to sell. They hold on to their shares, believing a strong upturn will come, and the demand has been bigger than the supply, which is the common rule of marketing, and then you just push stock prices upwards. Some stocks have had very, very slow growth, building tons of accumulated support below, while some had a wild ride upwards, and that brews for a heavy fall. One of these stocks is, of course, Nvidia, which was the trading tip of week 16. Now it hit high, starting to show tendencies of falling back, and you should be aware that given right circumstances, stocks that just move 25% in a single day, they can easily fall back half the way. Usually we use Fibonacci trying to determine the retracement levels, and in that case it should be some 66% from that strong gap, where it will go back and find the support. So if the gain was just, let's say the gain was $60 in a single day, so usually then it should fall back maybe as much as $40 before finding next bottom and continue upwards. It will be very interesting to follow in Nvidia and see if that will happen, but I just warn you, these are the things typical for the market. You just need that bad sentiment. Now everyone seems to be happy about the stock market, about future, about possibilities, but there are a lot of things behind the scenes that suddenly will catch media attention, suddenly will come up into the news. And as I just told you, the main money, the big money, they are moving away from the stock market. Some are finding the way into gold, some are finding the way into bonds, where you get a certain dividend interest rate for your investment. Personally, I'm also doing somewhat the same, diversifying a little bit. Anyway, stock market is stock market, and stock market may very well just go on an explosive rant. You never know, but there has to be some sort of liquidity pushing up. So the big thing this week is not debt ceiling. As I said, that part is done. Again, there is more focus on job numbers, and I've been mentioning and keep mentioning these job numbers, and so far I've been wrong, because I'm saying that I believe, I think it was already from November, that you would see an increase in unemployment rate. It is slight. It was down at 3.4 or 3.5%. Now it's up at 3.7, but everything been going slow. Now, I like to watch all sort of news. I read all sort of articles, anything from Bloomberg, whatever I find on Finance. I usually skim through everything. One advice I always given you: try to stay ahead on the news. Even just reading headlines is some good, because it builds up a general picture. But I like to dive into good articles. I follow good people on YouTube, wherever it is, on social media, that, in my opinion, have solid fundamentals for the things they say. And all of them say the same thing. They cannot understand what is going on, because every major trend lines shows that we are in a recession. But the job numbers, etc., they keep coming out more positive than ever. Now, over the last, let's say, 5 years, the word conspiracy theories has been very, very high up on the agenda. It's been abused to the utter end in any possible case. Either it was COVID, or it was the Hunter Biden story, or whatever it was. This word has been abused endlessly. And it might sound like a conspiracy theory when some now say that maybe the job numbers are not correct, that there is more behind the job numbers than what we see. Intentional, not intentional, you never know, but there are some speculation. One of the reasons why this is a speculation is, for instance, they said that the wage ranges was 4.5%, that people actually gained 4.5% on their wages. But Later they revised it, after pushing it for a super long time, they revised it to be negative, to be minus 0.05%. So how can they get that number that wrong, that insane important number so wrong? Because there has not been growth in the wages as they said. It's actually declined. And when we dive even deeper into the numbers, then we see that more people now have to do 2 jobs to keep up with the pace of inflation, which we already know is not going anywhere soon. On top of this, it's a little bit about how they measure unemployment numbers. So it's an interesting topic, and I'm not sure, but I think it may be as much as 11 times on the row. The market has been wrong in general. The experts, when they say that they every week they say that, or every month they say that we believe the job numbers will come in at this, they have come in lower. I love statistics, analytics, anything about it, and these things, they do simply not occur. If they occur, there are a special reason to it. Like numbers in general usually doesn't lie. So why has the experts got this wrong 11 weeks in total? It's unheard of. Even 11 months in a row, actually not 11 weeks, but 11 months, they got the work numbers wrong. So who is right, who is wrong? Is the bias too negative? Is that the point? Are we too negative about the economy? Is everything much better than we think? Or is it not? Anyway, I think we will have much more things coming up ahead in terms of economic numbers. Usually you as a private person, you can just judge your own economy, because that can give you an indication how it is in general. So if your friends are saying that now, well, we are starting to save on subscriptions on different things because the inflation has been so high, the food prices are now so high that we actually have to cut. We don't go to restaurants 3 times per month anymore, we are doing it 2 times. If your friends and you feel the same thing, it is a key indicator of what is really going on. Anyway, if numbers are correct, absolutely nothing is better. Absolutely nothing is better, but there seems to be a discrepancy here in these numbers. And it's job numbers again, which will be some of the things to follow. Now, with the strong job numbers, Fed has no other option than keep increasing the interest rates. I read somewhere that it's not expected to be any increase the next 2 weeks, but that they will continue. And this is in line with everything I said earlier, that the increase of interest rates will have to come. There is not only because job numbers are so strong, that the economy, at least on the paper, is so strong. The inflation is not going anywhere, but the inflation is not only driven by the unemployment rate, etc., the strong economy. It's very, very much driven by energy prices. And we always follow oil in this podcast, simply because I invested quite heavily into oil stocks when it was $20 and told you to do so as well. And it has been a fantastic journey ever since. Oil was up at 120. I rebalanced my portfolio a little bit, but I still keep strong into oil and believe oil will continue upwards. And this week, oil went up $1 to 74. It was down at 66, 65 somewhere. And you know that I have Chevron in my portfolio. Hurted Chevron somewhat, but now Chevron is again on an upturn. I think there is a good, strong upside in oil stocks. Some of the reason for this is that OPEC Plus is again cutting demand. The supply cutting by 1 million or 1.3 million barrels per day. And these things are slowly starting to get into effect. I think that these things will cause oil again to push upwards. And if for sure the economy is as strong as every number published suggests, then oil for sure will push higher. I have more reasons to believe oil will push higher, and sadly I have warned you over and over again in this podcast. I warned you long before the Ukraine war started that it would start. That would be the conflict. The next one would be Taiwan, and I said that I believe Taiwan would come within the first first half year of 2023. Hasn't happened yet. We are heading into the second half of the year. But if you follow the news, you can see the tension around China is really increasing at strong speed. Last week was again incidents. Been several incidents over the last few weeks, and even more so when China says that they do not want to have top level military talks with US. It's bad signals. And on top of this, we have the Ukraine war not going anywhere. We see that the NATO general Jens Stoltenberg, he don't argue for peace, he argues for more weapon, now urging more F-16s to Ukraine. And Ukraine is not moving forward on the battlefield, which means that we are stuck in the same scenario, which means that at any time, any of these two conflicts, the Ukraine conflicts, can escalate to something out of control. Or China can brew up to control. If these things happen, oil should go very hard. We know that the US drained their inventories more than a year ago, trying to keep inflation and gasoline prices down, energy prices down. They drained their supply. They have to refill their stock. And they wanted to do that below $70, but so far, as I said, oil is staying at $74. So, with no depth thing last week, I said that we are at that crossroad now, and I think that there is a higher chance that there will be more negative than positive news coming into the market. I like to look further ahead, what is happening further ahead, as a small warning, trying to give you a picture about the long run. So we know that US election is coming up next year. It's already starting showing up in the media now, but we also know the huge divide which has been and still is in the US population. And knowing that now the Russian collusion was just a hoax among so many other things, I don't think that dividement will pass anytime soon. I believe it is strong within the population. And you might be a Democrat, you might be a Republican. And if you're a Democrat, you might want to quit listening to this podcast simply because I say that I think that 2024 election can be a real tough one. It's simply because now they use all the books, tricks in the books they have to prevent Trump from gaining back office, and they will speed up. We've already seen all the collusion that is going on with the Fed, the FBI, etc. How they were suppressing social media and things, and these things are very, very scary indeed. That thing can also suddenly get a little out of hand, not maybe this year, but into 2024, when election and people's emotions are going up. And it doesn't matter if you're a Republican or Democrat, if we talk about the stock market, because you're here to make money, and that is what this podcast is about. Trying to help you reduce your losses, increase your gains, and if we get into a very, very ugly fight for next election, which usually they are ugly, but I mean really ugly, where we can see riots in the population simply because of abuse of power, and you just have to admit to yourself, if you bother to read more news than one side, don't be so biased, only read one news outlet, but read all of them, trying to get a depth of things. That is a high possibility. So we are in a situation where we have wars still brewing, the China conflict, we have the Ukraine not being solved. We have a huge US election coming up. We have economic numbers which are into disaster. Here you have to play your cards safely, in my opinion. The question is, will it just be a fantastic run? Will we go back to 16,000, or will we have a drop before we can find the final bottom? To be honest, I'm not sure, because I've seen everything in the market. I just prepare you to be aware of this possibility that we are heading into tons of negative news. The most exciting thing to me is that the stock market has already anticipated a lot of the things ahead. It's accumulated into the price. The question is just how much of bad news is already discounted into the price. We know that the quarter results earnings are coming in below expectation, and these expectations have even been lowered from before. So it's not like we can compare back to 2 years ago, because now the expectations for the quarter results has been lower, but they come in even lower. Reminding me, I think it's GME, GameStop on Wednesday, for those following that sort of meme stock. Should be an interesting one, interesting moves before, during and after quarter results on Wednesdays for GameStop. These things are brewing in this kind of market where things can go both ways. I just play it a bit safely, trying to understand where the week will go. That was the long lines, the things that you can expect upwards, and how to move within it. It is just, if you expect inflation to continue upwards, you do want to have part of your portfolio into inflation resistant stocks. It is just how it is. And if a company you invest in is extremely reliant on goods from China, for instance, you should follow and see how they deal with things. Take Apple as a case. Apple have clearly understood the risk of being in China, moving a lot of their production to India, because at any given point that conflict can escalate to somewhere where we get into trade related issues, blockage, all sort of things can happen. And in that case, if your company is too highly invested into that sort of market, getting their goods, for instance, from China, you can be in a bad run for some time. Just a warning, and just trying to give you the big picture there. Following the signals, I already said that Nasdaq was up at 39% buy signals this week. The highest ever in this portfolio serial on the fourth season now was 47, when Nasdaq was at 47% buy signals. I told you this will be hammock and hell, and it really became hammock and hell. 39 means that it still can go up. It can easily go up to 45, so we can have a green week. By all means, I'm just saying that now, again, we are getting into what is overbought territory, and usually we'll have a few weeks downturn afterwards. Overall, among all the stocks we analyzed in the world, we can see that last week was a good week indeed. They went up from 25 to 33% buy signals. Going to New York Stock Exchange, 38, also very high. Very seldom to see New York Stock Exchange that high. If I remember correctly, the highest I ever seen was 44% before having a total meltdown. And now we are back. Now we are talking back to the good old days when Nasdaq was up at 16,000, and I said to you, now I'm selling out most of my portfolio, reduced it all the way down to 30% because everything was way too high back then. London slightly increased as well from 19 to 26, Tokyo up from 32 to 37, while Shenzhen China is the only one struggling a little bit at 23. All these numbers indicate that it can be a good week, and this is the thing, when everyone is positive, you can just continue that positive thing. It is like, as I always say, it's like a party. As long as the party is going on, everything is brewing, and when you think it's hitting the peak, it can go even a little further, but suddenly air is out of balloon, the party is over. I think it's just a matter of time before we will have a small party break. Hopefully I'm wrong, that we will see everything continue offers. I have my fair share of stocks, and of course green is always much better than red. Now let's focus a little bit on the trading tip portfolio before we will end, where I will show you my trading boot at the very end of the podcast. Now we have been following this trading tips portfolio for this one. I think it's 2 years we've been following. Last year was extremely good. Start of this year not as good, but still we are in plenty of profit. And if you remember from last week, I had Chevron, Northrop, and Sumerica and Pins. These were the 4 stocks that I had in the portfolio. And I said last week that I think it can be easily a red week, it can be a green week. But I found out that Foot Locker was looking so oversold. And as I told you, now we are back maybe 5, 6, 7 podcasts ago. I told you that this now is that typical climb where you want to buy oversold stocks that are really hammered but has support below, and I found last week Foot Locker to be one. That was how we picked Pinterest, by the way, and Nvidia before that also shown the sign of being slightly oversold and had very little resistance above, and as I told you, that can just give an insane upturn. Last week, I added Foot Locker to the trading tips portfolio. I was able to get Foot Locker at $25.77 on the Monday. It was not the lowest at all. It was lower than that, but I was somewhat happy. Foot Locker didn't manage to do much during the week. I only managed to get 0.47% on the Foot Locker, but as we speak, it looks really good. And I think that you should have a look at Foot Locker, check out the charts and see how it looks. It's one of these that can go very well. Sumerica, which we bought last year as a penny stock, that can go because I've done so many trades in Sumerica and returned so insane profits in that company, has not yielded. We had it in the portfolio. We're getting into 40 weeks plus whatever it is. And it's sitting at a loss. It was in good greens 20-30% for a little time. Now it's back in negative again. But I'm patient, as I told you then when I bought the stock. This is the one stock that I will buy without stop loss. I want to keep it because when it runs, it will be too late to get it. So far I've been very off with that because it's just been a slow ride. But they are in the pet industry, and when the recession hit, pets is the last to suffer. You will cut many things on your budget before you start cutting the health of your pet, and Sumerica is one of these companies. Northrop, I told you also last week that I think the week will be very volatile, and I will not be surprised if any of the stocks will be cut by stop loss. And after getting dividend in Northrop, I got dividend last Friday, almost $2 dividend in Northrop. Sadly, Northrop was cut in the portfolio. Had a fall down to, I think it was 439, and was sold with 5% stop loss. So the trade in Northrop, which was initiated in week 17, was a long time in a good plus, then started to fall. Sadly is out. Doesn't mean I think Northrop is a very good investment, but with the $2 added to portfolio, the actual loss of the stock was 4.14%. Northrop out of the portfolio after week 17. Chevron had a few dollars upturn last week, but currently also Chevron is sitting with a slight loss in the portfolio. But also Chevron paid out dividend, and as I told you back then, I wanted to be in some solid stocks that could handle a very volatile market. But Chevron is still in the portfolio, and I believe Chevron is to deliver more good. Then in week 20 I added Pinterest to the portfolio. I said it was clearly oversold on the relative strength index and this stock may have a huge upturn coming. And it was very good idea to buy Pinterest. Bought it at $21.45. It went up to $25 or something. And then it was sadly cut by stop loss in my portfolio at $23.78, giving 10.86% profit. So currently the trading tip portfolio sits with Submedica, Chevron and Foot Locker. Pinterest is out and Northrop is out. Only 3 stocks left in the trading tip portfolio. And during this week I will not add any more stocks. I saw earlier this morning going through a lot of stocks. I saw quite many nice stocks that should have high potential upturn. Again, I advise you, if finding stocks, look for those who are oversold on relative strength, and it's such an easy tool to use. Make sure that they have good support below accumulated volume from previous trades, because if markets go down, these shouldn't fall too hard. They have that strong potential upside. We are already at 31 minutes, and I will end this podcast showing you, for those who watch the YouTube version, I will show you my trading booth. But before that, let us just remind why and what is my incentive for building the trading booth. As I told you, who follows the podcast, I do not want to sit and day trade every single time. I did that for a long time, and it is extremely emotional. I don't have time for it because I'm building businesses on the side, and I cannot sit all day, all evening trading stocks. I don't simply have the will to do it. It has to be some sort of pleasure. I want to do many other things. As you know, I do metal detecting when I have the chance. I go to the gym in the evenings. I want to do different things than just sitting stuck watching stock markets, and especially US stock markets is the best markets in my opinion for trading. So all along I've been wanting to do the same thing. I wanted to build a trading booth, been doing that and had some successful attempts. Then I had to revert my strategy. It was more or less technical things, but again, I am back on the track. And I opened the podcast saying that we are in a bridge from the old type of podcast to the new podcast. As I told you, I think now is the time for more aggressive trading. I gave you all the reasons why. I said that from second half of 2023, I think again, and I already started, as I told you, with giving you all these tips with relative strength index. Now is the time for pickups. The main big stocks, they had their run. Now all the second ones and the third ones follow, and I want to be in it. I made such insane gains when I started stock trading using this strategy, and I will slowly get you into this as well. And using relative strength index is such an easy tool. Just have to make sure the following thing: make sure it's a liquided company, and make sure that there is support below. These are the two absolutely things that you have to follow. The third thing is make sure that there is not too much resistance above, because that will make for a slow ride. You typically want these gaps where there is no resistance, and you can calculate, is it 5%, is it 10%, and Pinterest was such a case. Absolutely good, easy tool. I think now is a good time to do all these positive trades. And if you are the aggressive type, and most of you are, you want to be in penny stocks with possible insane upturn 100, 200, 300%, you can use the same strategy. It works, but with much higher risk. And the bridge means that now the trading tip portfolio that we've been following is coming to an end. I will summarize it. I will give you all the top trades. You will have all the numbers, but we will move into the new one, which will be a little bit more aggressive, and among these things is the trading boot. So I put up on the screen, you will see just how it looks like. Now this is on the webpage getagraph.com, which was the original webpage which I started so many years ago. I took it away and went to Vilnius, Lithuania, building up Stockinvest.us, but I brought back a new version of Getagraph, and this is just my playground. It's just a place where I play with ideas, but there you will find many interesting tools. You can, for instance, find candlesticks. You can see which companies that will give you that has different buy signals from candlesticks. You can see here that Apple currently has a buy stick from the dojo, etc. You can watch the same thing with Meta, and Apple currently has buy and sell signals from different candlesticks. But back to the boot. Now I will make this available on the page. So now if you go to the page getagraph.com, you will not be able to find it, but I will make a link for it. I just called it Mega Shark Trader so far, but where you can get a link to it. So just to give you an idea what I'm doing. So I generate signals, always been doing that, always finding these super signals, these signals that really do good. And if you have been using TradingView or you have been using any other type of software, you will find that there is tons of signals. There is momentum indicators, MACD, all sorts of things which you can use. And I've been playing around with these things now actually for getting close to 30 years, believe it or not. 30 years I've been playing around with all these things, trying to understand them, trying to find what really works, what kind of combinations do you want. I created a big database which I run, and currently I only run it on minute ticks. The reason for this is that I am not a programmer. I'm self-teach. I can do quite much with what I know, but I am not a programmer. That caused my very first page to crash. It became too popular, and then it crashed because error logs were building up, couldn't handle the traffic, and I, as I said, I'm not a professional programmer, but I know my way around programming. So to be able to deal this, what I currently have built it is in minute ticks, because I do analyze more than 4,000 stocks every single minute, generating signals as we fly, and I intend to increase this to 8,000. All these calculations, they have to happen at the speed of light, and to achieve that, you have to go up a huge level. To do this with real-time data, you have to go up to a level way above me. We are talking GPU calculations, we are talking so many things. Now if you go to TradingView and you add your ticker and it follows, it will follow only Apple. But as I said, I want to do all stocks, because in my opinion, among currently doing 4,000 stocks, among these there are some that are doing very good, and that is the database which I'm building, ticking every single minute, and I can track the historic of all these 4,000 stocks, how they are doing, and by that I can easily print out a list which stocks have yielded the best gains using that signal, that signal, that signal. And that by itself is indeed a good tool, because if you do understand signal trading, and one of the users I think commented he look forward to hear more about signals, etc. Now if you do understand signal trading, you will understand that every stock is individual. Some stocks do very good on the relative strength index, some do not. Some do very, very well with inside trend lines, meaning that they are very, very stuck to the trend line. When you get to the top, you can almost more or less say by 100% that they will fall down. They behave in certain ways. Some don't care about trend lines, typical penny stocks, etc. They move in and out of trend lines just as they want, while some stocks like Apple, Microsoft have a stronger tendency to behave within the trend line. If you use the market, if you use pivot points, whatever sort of signal or indicator you use, stocks behave very individual. So being able to track all stocks and see which signal worked the best for which stock was always my goal. And I'm slowly getting there. So the next part was, of course, trying to test this into the real deal by putting it up with an actual auto boot trader. As I told you, I don't want to be stuck. First, I tested it manually, did many trades. Was very happy with the results and continue then to tick it to the boot. What we do have to understand that this is beta, it's prototype building. When I am very happy with what I see, I will hand it over to professional programmers to develop every aspect of it to make it as it should be. Anyway, welcome to Mega Shark Trader. So if you are watching on YouTube or the video version on Spotify, you will at the screen see I will change the language, because you can change language to whatever language. I think I have 7 languages. Now let's do it in English. So here is the admin panel, and you can see that I'm connected to Alpaca, is the trading application, which I do. And I will not disconnect, but it's as easy. You just copy 2 lines of API codes which you get at Alpaca, you insert it, and then just click activate auto trading and it will be followed. So you see these 2 green, that just means that I am online, I am activated, the system will trade. You will see the balance, and here this is just now it's trading on paper money. It's using all real values, but it's trading money during the week. I will flip it to actual money because it was a testing period. You set it, or I made it so you set the limit that you want to trade for, because you hear me in this podcast series. Now I think that you should reduce your risk. Now I think you can increase your risk. So one of the things that you want to do is decide how much money do you want to have active for trading this month. You may have 10 times more on your actual trading account, but the system will only trade as much as you set it allow to trade. So because I want to balance this week, and eventually this will also have an automatic option where you can just let the system by default choose how it diversifies. You can read tons of books about this. It's very much about this risk management things, how you manage your risk. And this is just showing the practical way how I always done it. When I say I want to increase the risk, so I increase the amount of money that I put into the market. Below you have currently you see I'm testing on Microsoft, Apple, Tesla, Nvidia and Lucid, and I allow the system to trade with $2,000 in each of them. And as I promised you, for the upcoming series of this podcast, I will have a trading portfolio and we can agree on the limit. Back in the old days when I started my journey into trading, I started with $450, somewhere around there. Made it my way to nice figures. I always wanted to see if I could repeat that. That will not just be following the trading boot. The trading boot will be a separate thing, but I will make a portfolio where I will use the strategy which I use them, because I think, as I said, the markets is at a place where that strategy may very well work. So that is the upcoming series. It will come. I will have a little holidays moving forward, but for the fall, that will be the new trading tips. But we will follow this trading boot, see how it does, because I still need to squeeze out many small things to improve it. So as I told you, I do create tons of signals. Here I put in the stocks. Now the system checks the stocks. Is there any signal generated? If it's a buy signal generated, it flips and go and buy the stock. And simple testing, just showing you the testing panel. So here you can see the trades. Currently on Friday it bought or kept open Apple, Microsoft, Nvidia, Tesla. All of them were bought early on, and we will see how that will turn out today. There was several trades done in Microsoft and Apple during the day. So it absolutely we will see how it will perform today. But so far it is way up in profit. I've been testing it 3-4 times, and the yield is very good indeed. Profit loss so far today, because some of these stocks, they already have pre-trade open, is at a loss at $78 so far today, but it's pre-trading, and we'll see. During the day, I guess some of these stocks might be traded 2-3 times. Now, down the page, you will have more information. I just show you quickly what it is, and I'm currently, as I said, developing this more. Microsoft since I reset the portfolio last week. I think it was Thursday or something, so it was only open Friday or something like that. So Microsoft, for instance, has had a profit loss of $25. It's been, the money has been spent 2 days. In average, it's been 156 minutes, but because that is due to the week. Now, I tried Bitcoin as well on one of these signals, but Bitcoin, and that is cost me a $62 loss. Bitcoin was not suitable for that signal at all. All of these are running on the same signal. That signal is based on the relative strength index with a few conditions, and I will get back to that. So here it is live trading today. It will tick by itself. I will see how it goes. And next week I will give you even more insight into this. I will make a link on getagraph.com where you can click and you can see you can have an overview over how my settings are doing. There is a few other users allowed, which I have allowed to try it on paper money, but you will not see theirs, but you will see mine. It will be buggy sometimes, so if there is some errors or you see some errors while browsing, don't panic. It is just me squeezing out some bugs. Hopefully I will have this one project fully running in the better part of a month, but already this week I will put in live money. And very interesting, and here comes the little twist. When market was doing very, very bad, this performed very well. To me, it's not a surprise because it uses some very general rules about greed and fear. And that was the very first podcast episode in this trading series. The number 1 podcast was named Greed and Fear. Uses the same basic principle. So this became an insane long podcast, 48 minutes, way above where it should be. But it's a bridge. We are coming in to new times. I hope that you at least found some parts of the podcast interesting, and I really hope that you will put a lot of green into your portfolio during the week. And if you're back next week, that you had more money, that you have more money than you had this week. Anyway, best of luck on this week and your trading, and hopefully I will see you back in a week. Bye.
Welcome to Stockinvest.us stock analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon Stockinvest.us. By using the information you agree and are held liable for your own investment decisions.